Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for September 17th, 2024. Well, yesterday we saw those bulls really pushing to the upside, particularly in the Dow, really trying to squeeze back to the upside after a bit of a whipsaw. Today they're doing the exact same, pushing pretty hard as the FOMC begins its two-day meeting. Let's take a look at what happened overnight here in the market. Asian markets were mixed, but mostly higher. Australia moving to the upside by 0.24%, while the Nikkei saw a decline of 1.03%. We have Hong Kong up sharply here at 1.37%, and Shanghai lower by 0.48%. If we take a look at European markets this morning, they are very bullish this morning after closing mostly lower yesterday. The DAX being up 0.87%, FTSE is up 0.78%, and the CAC is up 0.87%. We take a look at U.S. futures. We are also green across the board, with the Dow up 105 points at the moment, up 0.25%, S&P 500 up 0.30%, and the NASDAQ recovering a bit from yesterday's softness, up 0.49%. If we take a look at oil, well, XLE, if we take a look at oil producers, they have been running to the upside the last 3 days after recovering off of this low. And you can see this morning maybe catching just a little bit of softness. Right now, energy prices are pushing back just a little bit. They're suggesting low Chinese demand, which is certainly understandable, considering their economic condition. Right now, oil down 23 cents a barrel at 69.86 a barrel, and Brent crude is down 34 cents at 72.41 a barrel. And if we take a look at natural gas after a nice recovery yesterday, down just a few cents here this morning, trying to hang in there. Now, if we take a look at the crypto markets here this morning, yesterday they had a really rough day, but crypto is recovering here today. Bitcoin right now up $1,278 dollars a coin. Ether is up 31.18 a coin, and mostly green across the board there on those cryptos, with a big push back to the upside. Now, if we take a look at US dollar had a rough day yesterday, and you can see opening down here, and I'm guessing that's helping as US dollar continues to show weakness heading into likely rate cuts. And then, of course, if we take a look at our precious metals, we're getting a little bit of an opposite reaction here on gold this morning. GLD pulling back, going to lose that $2,600 marker here in per ounce in the market. Looks like, anyway, it's right now just directly at $2,600 an ounce in the futures, down $8.50 an ounce. And if we take a look at silver had a good pop and drop yesterday, still holding on to some green into the close, but as you can see, pushing just a little bit lower as it tries to rest and consolidate here, maybe hold on to that support. And then if we look at the rest, copper's just slightly up, platinum is down, and palladium is trying to continue that stretch to the upside after breaking through this resistance. So any rest or pullback in palladium, I think, would set up an opportunity. If we were to take a look at bond prices here this morning, the 2-year bond is at 3.57%, the 10-year 2%, and the 30-year bonds at 3.92%. So continue to show considerable weakness in those bonds with a huge anticipation in the market. As a matter of fact, the Fed Funds Futures is now suggesting a 67%. Traders are pitching for a 50 basis point cut at 67%, up from 47% just last week. Now, a lot of the folks out there are suggesting unlikely that that will probably be a 25 basis point cut. So kind of keep in mind as we stretch this market to the upside heading into those reports. They've kind of priced in a big rate cut. If they don't get it, just be prepared for the market to be a little bit disappointed Wednesday afternoon. Let's take a look at, first off, we've completed the first part of the morning, so first part of the video anyway, so how about we settle in, let's buckle up, and let's get ready for the Tuesday edition of the Morning Market. Good morning once again, everyone, and thank you so much for being here today. I very much appreciate it. Let's take a look at these charts, see if we can figure out how we might want to approach the market for today. Remember, we want to shake off that bias. We want to look at the charts for what they are, not for what we want them to be, and plan our day carefully around that assessment. Well, first off, if we look at the diamonds, we are now 1, 2, 3, 4, 5 potentially days straight back to the upside. New record highs here in the diamonds. They struggled a little bit there yesterday, holding on to it, but surged up at the end of the day to make sure we can hold that to the upside. And as you can see, trying to stretch that again here this morning. So if the bulls can continue to find that inspiration, well, remember, all we have is blue sky up here. So the sky's the limit here on the diamonds. If the bears, however, were to find some inspiration, and I would be carefully watching for the possibility of whipsaws, because we are getting so short-term extended here in the market in this huge anticipation of a rate cut. But if we were to pull back, I'd be looking for an area like right in here and right along this little upside trend. Remember, we broke that trend. We're trying to recover it. So one of the most important things for us to see now is that up here holds. If we can hold that support, then that sets up a very bullish situation for the Dow. If we were to slip back below there, that would raise some concerns in the market, and we might start moving down progressively through some of these areas in the chart, looking for those support levels in that area. Right now, no signs of that, but we are getting kind of extended in the short term. If we take a look at our SPY, continuing to try and squeeze up. They didn't make it yesterday. It looks like they're making an attempt here this morning to break through. We're really close, and break through into a new record high here in the SPY. They've been pushing and pushing and pushing to try and get that done. So watch that carefully if they're able to squeeze this up. New record highs possible, and blue sky above in the SPY if that were to occur. Now, if those bears were to find inspiration here today, then maybe a pushback down to test this support area here, and then breaking down below there, I would suggest we start coming back down into some of these levels in the chart, testing some support on the way, keeping in mind that the SPY squeezed above its 50-day moving average. So if it were to pull back and test for a higher low, something like that, that would really be out of the question, and we're in good shape as long as we hold above that 50. If we take a look at our QQQ, well, very similar situation here where the QQQ has just squeaked above its 50-day moving average, and once again they're trying to squeeze here today to push that to the upside, keeping in mind that we still have to deal with this resistance and this downtrend. It looks like they might try here at the pre-market to pop that through, and if they can pop that through? Well, we've got some areas in here we'll want to be paying attention to. Can we start breaking back through some of these price resistance areas in the chart as we progress back up toward that resistance in the chart, which is relatively significant? If the bears, however, were to find inspiration, you can see a pushback down here. Below that would constitute a potential failure of our 50-day moving average, and we might start coming on back down to test some of these levels here in the chart on QQQ if those bears were to really get going. Keeping in mind that this right here could serve as an upside trend, so if we were to push all the way back into here, we might find a hold in this giant wedging pattern that's been forming in the QQQ. So watch carefully for those possibilities. And then if we look at our IWM did squeeze through that little downtrend here in the chart and now pressing against this resistance. If we can continue to see that bullish activity today, find that inspiration in here, well, we'll squeeze maybe right up into this area and then start pushing on up. If we can get through this area, then we're probably looking at an attempt to push back into that high in IWM. If the bears, however, were to find inspiration, not too hard to see a pullback to test this trend and that big white candle right there, maybe as a little bit of support. If that were to break, then we might start progressing down. Notice we left a pretty big gap down here if the bears were to really get going, pushing that on lower. So kind of keep an eye on IWM, and remembering that also could be a critical area if we fall into that gap, because of our 50-day moving average right in that area. Then if we take a look at our VIX, although we were surging to the upside yesterday, I want you to make note that our VIX actually moved up just a little tiny bit. We're still finding a little bit of price support in here. We're waiting on that data from the Fed to see whether we're going to be bullish or bearish after that data. And a lot of uncertainty here in the market. Remember, we have a potential government shutdown at the end of the month as well. And of course, all the uncertainty as we wait for the next round of earnings here in the market. So watching this support in here will be critical if the bulls find inspiration pushing down. If the bears were to find some inspiration, then maybe we start pushing back up here just a little bit to test some resistance levels in the chart. And you can see we could even come all the way back up here with a little bit of fear if it happens in the market. Looking at our T20s, got to learn how to type. T2122, as you can see, we're very stretched up here, and although we continued to try and stretch into the close, and we're stretching this morning, we're likely to see the T2122 kind of cap out here today with this squeeze to the upside, working to get the SPY to a new record high. So on this gap up open, watch that carefully for that potential whipsaw. Remember, we can linger up here. We've done that before where we've lingered up in this area, but there has never, ever been a time that when we're up here, we don't find some reason to pull back. What this means is our market is very, very extended in the short term, and so profit taking could come in at any time. Any stumble in the market, look for a pullback to occur. So my suggestion is stay long on your positions, but make sure you're raising those stops and protecting yourself in case that selling wave does come in, because it could start at any moment. Doesn't mean that it will, but it could start at any moment, so make sure you're prepared for that possibility. If we look at our T2108 continued to progress higher yesterday. Not quite making it up there to that 60% area, but unfortunately we showed just this little bit of a hook here. Now, this morning we're going to stretch this a little bit more, but kind of keeping in mind that we're coming up into maybe this downtrend. We'll see if we can break through there. And we've got a lot of price resistance up in this area of the chart. So watch that carefully in T2108. This is a percentage of stocks above the 40-day. There's just tremendous hope of a 50 basis point cut, and we're really pumping the market hard. So remember, if they happen to come out with a 25 basis, watch for the market to potentially be disappointed tomorrow afternoon. So be careful with chasing already extended stocks. And then our T2107 is also stretched up here just a little bit more, but showing that little bit of a hook. Remember, we still have that same situation here with that downtrend here in the chart that we may try to breach this morning. Watching up here, we've got considerable resistance levels in the chart as well, up around that 60% area. So kind of keep that in mind. And our T2101, we actually saw a little bit of breadth coming into the market yesterday. Little push up, probably some of those corporate buybacks that can continue to go on here, but every single day more and more companies are going to be sliding into that blackout. So we're going to likely see the breadth of the market begin to diminish here pretty quickly. So keep that in mind. Rising on lower breadth sometimes makes for a dangerous situation. And it could be a situation where retail is chasing these stocks higher, giving institutions that opportunity to sell and lighten up their positions overall heading into some of this data. So what does that mean? Well, how about we take a look at what we've got going on our economic calendar today, because our economic calendar today is showing us some data that definitely could move the market, and we'll want to be paying close attention to that. And it comes out here before the bell. First off, we're going to have retail sales numbers. Now, retail sales right now, they're suggesting they decline from a 0.1% to a negative 0.3. And as you can see, they're looking at X vehicles to decline, and they're looking for X vehicles and gas to decline. Now watch this closely. Hopefully we come in no worse than this. If it comes in worse than this, the market might see that as a problem for the market. Now that does give them hopefulness of a rate cut, and maybe even a bigger rate cut, but also could show the market pretty clearly that the consumers are slowing down. So watch carefully. If for example, these come in hotter than expected, well, that might dim some of that possibility of a rate cut and disappoint the market there, because showing that retail sales are too strong for a major rate cut. So watch this carefully. I would expect some volatility this morning when that number comes out. Right after that, we're going to get industrial production. They are expecting industrial production to show an increase here from a negative 0.6 to a 0.1. So keep an eye on this. Manufacturing output, they're saying, goes to 0.0, and that's up from a negative 0.3. And they're saying capacity utilization goes up by 1/10. So keep an eye on that as well. Also a market moving report. After that, we've got business on inventories. They're looking for those business inventories to increase. That's usually not something you want to see. And if you take a look in here, you can also see that we've got housing market index, and they're looking for that to tick up by 1 point from 39 to 40. So watch that closely. And we've got apparently some recorded remarks going off by Logan here today. So there will be some remarks. I doubt it's going to be market moving. Remember, the Fed is now in its blackout period, obviously, and when they've started the meeting today, or will start the meeting today. We've got a 20-year bond auction that might be interesting to pay attention to. And then as we look into Wednesday, of course, we're going to be dealing with mortgage applications, housing starts and permits, a petroleum status. We've got more Treasury buyback going on. We've got a 4-month bill auction, and then, of course, the big event of the day at 2 p.m. Eastern Time. We're going to hear from the FOMC. The Fed chair will be giving his presser, and that's likely where we'll see the majority of the volatility of the market occur. And then a Treasury International Capital after that. Let's take a look at our earnings calendar here for today. Earnings calendar, not going to get a whole lot of information today. I've only got one notable for this morning. Ferg will be reporting this morning, so keep an eye on that. Showing a little bit of bearishness here this morning at price resistance, and of course still in a downtrend here on Ferg. So that's the only real notable for today. After the bell, no particular notables to be, mostly just very small cap things that we'll be reporting, and not market moving events. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and click that thumbs up button, leave a brief comment, that helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that. I know it's got to get monotonous doing that every single day for a daily video, but it also helps support the effort to put these videos out. So thank you everyone who does take the time to do that. I truly appreciate it. And I apologize I didn't get to answering those yesterday. I got a little bit too involved in the trading room yesterday and didn't break away in time to answer those. So I'll be back on task here today to take care of that. Let's take a look at some stocks that could be setting up for today. But remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market. You want to make sure that you're paying close attention to these big news events in here and how that may affect your positions. So plan carefully in your trading. Well, first off, let's take a look at what we've got going on here in some of these gold miners. Barrick Gold just resting back now. Now, gold, as we know, has been surging to the upside, still in a strong upside trend. If Barrick Gold rests back and finds some support in here, watch for that next opportunity to potentially move on up. Newmont was also a very good looking chart the other day, pushing off of this support, now resting back in here. So I would keep an eye on some of these gold miners. You might want to take a look at an ETF like GDX to maybe watch for this next opportunity if that gold continues to hold on a rate cut. We did see one of the major banks, I want to say it was Morgan Stanley, came out and suggested with rate cuts, gold could go to 3,000 an ounce. We'll see, but right now hanging in there pretty strong on GDX. On GDXJ, you could take a look at those junior miners in here, also showing some bullishness in that chart, so keep a close eye on those. Let's take a look at a couple other things in that commodity area with yields going down and bonds rising. Keep a close eye on things like TLT. TLT breaking through 100, showing strength yesterday, continuing to move up, looking good. I've been suggesting this for quite some time. This is looking very, very good. If we look at stocks like BND, bond funds, also very strong. You guys know I've been talking about this, showing lots of strength as we continue to press to the upside as those bond yields come down in high anticipation for rate cuts. So watch that carefully. Could see some volatility in this tomorrow. I wouldn't rule out the possibility of even some pullback in here, but watch that closely on BND. And then also places that you might want to be paying attention to is some of these commodity prices that have made some pretty good moves in here. Take a look at Alcoa moving up strongly here on aluminum. As the dollar falls in price, you will typically see stocks like Alcoa and anything in the metals and move back to the upside. So as you can see, nice stretch to the upside. We're pressing into this W formation to see if we can hold. I think any rest, consolidation, or pullback in here sets up that opportunity. It may have to pop on through and hold up here. It may have to rest right in here. It may pull back and put that little lower high in, but watch carefully for that possibility of Alcoa. And you guys know one of the things I'm always watching for is a break of the downtrend and a hold of a higher low. That's the reversal pattern in the market. So watch that carefully for Alcoa. Take a look at some of the things in grain commodities. If we look at corn making that higher low, coming up out of this bottom, pushing up, pushing through some resistance, making that higher low, could be about ready to move on higher if the dollar continues to fall. Take a look at wheat. Wheat is also doing that same thing, coming up out of that bottom, showing some bullishness, and even cane, sugar, starting to move up. Now it hasn't come out from underneath that downtrend yet, but notice that little higher low in there trying to form. So watch that carefully. If that were to rest and push on through, there's a little inverted head and shoulders pattern I just drew out there. So watch carefully on cane for that possibility. And then you might even want to keep a little eye on steel. Now steel has been really, really weak here recently, but notice that big strong move here off of that bottom. A little bit of a rest here in that could set up that next opportunity to the upside. So keep an eye on cane, at least moving back up to its downtrend here in the chart. Other places, let's take a look at our financials here. Our financials continue to stretch back up here, and we're going to see if we can test these resistance levels up here in the chart. And I would watch that closely. This could be very dependent on what kind of rate cut we get in here. So as we push back up, remember, we still have that potential of a lower high or a double top high in those financials. Watch that closely here. A little bit of uncertainty maybe in those financials, and of course we see a lot of these still being quite weak, like BAC still moving in that downtrend. And I think any rally back up here to this resistance sets up the next potential short on Bank of America, Citibank. I'm going to say the same as we rally back up toward this downtrend, and you can see we got a little bearishness coming in here this morning already, pushing this little pop and drop going on. As we push back up here toward that resistance and downtrend, I would be looking for that next opportunity to short in Citibank. Other places out there, we're seeing some unbelievable strength in some of these defensive sector type stocks. Walmart really looking good. Costco still holding up very good, even after they'd received a downgrade, pushed on through to a new high. Might be struggling here just a little bit, but that's still looking pretty darn bullish overall. Take a look at some stocks like 3M, old boring stock for sure, but very nice dividend payer, pushing back up, showing that bullishness, trying to break through up here. Keep an eye on that. We're also seeing some tremendous strength in the utilities. The utility sector, XLU, still running in a very bullish upside trend, as you can see, just showing all kinds of strength to the upside. And there's a ton of companies in that area here having very bullish patterns. Yesterday, like AEE pushing out. Southern Company was looking beautiful yesterday and is still setting up a nice, beautiful upside move. So quite a few things in that utility sector, those dividend payers in there, looking looking very, very bullish. So with that, everyone, there's a few things for you to look at today. Thank you so much for being here. I really appreciate it. Just another reminder, everyone, that I will be out of the office Thursday and Friday, so there will be no morning market prep videos those 2 days. I will be out just before the weather starts to turn here in our area, and get some hiking in, a little bit of camping, and take a couple of days break here before we start seeing that weather really turn here in our area. So everyone, I want to wish you all a fantastic day. Have a great results in your trading, and I will see you right back here bright and early Wednesday morning. Wish you all the best.